Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today, we'll take a look at a continuation breakout trade setup. This type of trade setup is formed when the price is trending and then starts to consolidate for a while. And now we're looking for price to break out to one side or the other. So in this case, because it is a continuation trade, we're looking for price to continue the trend that it was in before. So let's go on to the charts and we'll take a look at how to identify a continuation breakout and how to trade this effectively.
Continuation breakout is when price establishes the direction and then we are looking for a price to continue in the same direction. Here we see that the price had been coming down, it hits a low and then starts to pull back. So this new trend is what we are looking at. Once the price pulls back, it goes into this consolidation, a bit of a range here. So we have a low here and a high here, and price just trades back and forth in this area for quite some time. Once the price breaks out of this range, this is what we are looking for. We are looking for a strong candle that will take us out of the range. Once the price breaks out of the range, as we can see, price is holding the high here. We can enter our trade once we get this green candle close. You can also enter it over here because price has now broken out, but we are looking for price to hold the breakout area here. Once the price starts holding, we enter our trade and our stop loss can go behind the pin here. Just make sure we have enough room in the trade for it to breathe. We enter the trade here and we continue on with the trade as long as our candles are green here. And once we hit the high here, price starts to go sideways. So this is our cue to exit the trade. So from entry to exit here, we have 80 pips in the trade. So just to recap here, we are looking for price to break out of this range. We're looking for breakout of the consolidation area. Once the price breaks out, we enter our trade as it goes above the highs here. We enter our trade here and we stay in the trade for as long as our candles are green. Once the price starts to go sideways here, we can exit our trade. So from entry to exit, 80 pips in the trade or $800 in profit if trading one standard lot.
Thank you for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends and don't forget to comment, like, and subscribe to the channel. That's it for today and I'll see you next time.